Article 48, Reverse Charge. In the UAE VAT system, the reverse charge mechanism is a method where the recipient of goods or services is responsible for accounting for VAT instead of the supplier. This mechanism is usually applied in cases involving imports and certain domestic supplies where the supplier may not have a presence in the UAE, or in cases involving specific goods such as oil, gas, and hydrocarbons. The reverse charge ensures that VAT is properly accounted for within the UAE, even if the supplier is not registered for VAT in the UAE. 1. Reverse charge on imported goods and services. When a taxable person imports concerned goods or services for business use, they are treated as making a taxable supply to themselves. They must calculate, declare, and pay the VAT in their return, regardless of whether the foreign supplier is UAE VAT registered. 2. Exception for goods destined for another implementing state. If imported goods are destined for another implementing state, VAT is handled under the special procedure set out in the executive regulation, not the standard UAE reverse charge mechanism. 3. Reverse charge for domestic supplies of oil, gas, and hydrocarbons. When a VAT-registered supplier sells crude oil, natural gas, or pure hydrocarbons to another registrant in the UAE for resale in the same form or for energy production distribution, the reverse charge applies. The supplier does not account for VAT. The recipient accounts for and reports the tax. 4. When the reverse charge on domestic supplies does not apply. The reverse charge for oil, gas, and hydrocarbons does not apply if the recipient fails to provide a prior written declaration confirming use for resale in the same form or for energy production distribution. The recipient does not confirm VAT registration, or the supplier does not verify the TRN. The supply is already zero-rated under Article 45, example, exports. The supply includes goods or services other than the specified oil, gas, or hydrocarbons. 5. Declaration by the recipient. If the recipient confirms VAT registration for reverse charge, the supplier need not account for VAT. The recipient reports the tax, but the supplier may still be liable if they knew the recipient was not registered. 6. Joint and several liability in case of supplier negligence. If a supplier knew or should have known that the recipient was not registered at the time of supply, both parties are jointly and severally liable for the unpaid VAT and may also face penalties. 7. Executive regulation defines full rules. The executive regulation provides the full details of how the reverse charge mechanism works. It specifies A. Conditions and cases when the reverse charge must be applied. B. Additional record-keeping requirements for taxpayers who apply the reverse charge. C. Administrative obligations to ensure compliance. 8. Cabinet powers to expand reverse charge scope. The UAE Cabinet has the authority to add new types of goods or services to the list of supplies covered by the reverse charge mechanism. The Cabinet will also define the specific conditions that apply to these newly specified goods or services. For more details, contact us.